Hi everyone, this is Victor here. As you may already know, Facebook or Meta stock dropped as much as 26% right after its recent earnings release. This is the largest drop in market cap in recent history. There are many reasons for this large drop. For example, Facebook reported the first drop in daily active users compared with the previous quarter. Facebook's revenue growth and daily active users growth have slowed down a lot in recent quarters. Facebook is facing a lot of competition from TikTok and has problems attracting new users. Also, Apple's iOS app tracking option is impacting Facebook's advertising business a lot. All these things combined have caused Facebook stock to drop as much as 26% after its earnings release. So in this video, I will talk about, is Facebook stock a value trap, or is it still a great company for long-term investing? I will cover these topics in this video. First, Facebook's increasing competition with TikTok and slowing user growth. Second, Apple's app tracking option that's impacting Facebook's advertising business. Third, Facebook's Metaverse business. Fourth, is Facebook stock a value trap, or it's still a great company for the long term? Fifth, Facebook stock valuation. And sixth, did I buy Facebook stock? If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a premium member. Our goal is to help all our members grow their stock portfolios to over 7 figures over time. With your support, we'll be able to stay independent, hire other outstanding analysts to cover different stocks, and create many excellent stock analysis and investing videos every week that will help you become a great investor. The link is in the video description. Take a look, let's start. So why did Facebook stock drop as much as 26% right after its earnings release? There are many reasons. The biggest reason is that Facebook's daily active users and advertising revenue growth have slowed down significantly in the most recent quarter. Facebook is facing a lot of competition from TikTok, and Apple's iOS 14.5 app tracking option is affecting Facebook's advertising business a lot. For example, management said, we expect first quarter 2022 total revenue to be in the range of 27 to 29 billion, which represents 3 to 11% year-over-year growth. We expect our year-over-year growth in the first quarter to be impacted by headwinds to both impression and price growth. In comparison, Facebook's total revenue grew 20% year-over-year in the Q4 quarter. Before that, Facebook's total revenue grew 35% year-over-year in the previous Q3 quarter. In terms of daily users growth, Facebook's daily active users dropped 1 million from 1.93 billion in Q3 to 1.929 billion in Q4. This is the first time Facebook's daily active users have dropped compared with previous quarters. The main reason is that Facebook is facing a lot of competition from TikTok, the most popular social media platform for short-form videos. Facebook is having problems attracting new users, especially young adults. Mark Zuckerberg said this in the recent earnings call. The first is competition. People have a lot of choices for how they want to spend their time, and apps like TikTok are growing very quickly. And this is why our focus on Reels is so important over the long term, as it's our work to make sure that our apps are the best services out there for young adults, which I spoke about on our last call. The second area and related to this is that we're in the middle of a transition on our own services to our short-form video like Reels. So as more activity shifts toward the medium, we're replacing some time in newsfeed and other higher monetization services. So as a result of both competition and this shift to short-form video, as well as our focus on serving young adults over optimizing overall engagement, we're going to continue to see some pressure on impression growth in the near term. Now, I'm confident that leaning harder into these trends is the right short-term trade-off to make in order to get long-term gains. We have made these types of transitions before with mobile feed and stories, where we talk on headwinds in the near term to align with important trends over the long term. And while video has historically been slower to monetize, we believe that over time, short-form video is going to monetize more like feed or stories than like watch. So I'm optimistic that we'll get to where we need to be with Reels too. As of now, TikTok is growing much faster than Facebook. TikTok already has over 1 billion monthly active users. According to this website, you can see TikTok's monthly active users have been growing very quickly in the previous quarters. In comparison, Facebook's monthly active users have been growing much slower in the past quarters. Here is another problem. Short-form videos are very popular now, and people are spending a lot of time on these short-form videos. TikTok is the most popular social media platform for short-form videos, and is very popular among younger users. Facebook is having problems attracting more new users, especially the younger adults, because many younger users are spending more time on TikTok than Facebook. Facebook tends to attract older audiences. This is why Facebook's daily active users actually dropped 1 million in the recent Q4 quarter. In the recent earnings call, Facebook's management admitted that TikTok is Facebook's biggest competitor. Management said this: "I think what we said about overall kind of user growth is what we're certainly seeing an impact from strong competition, particularly with younger audiences. So that's true, and we're kind of seeing that globally." Another large problem Facebook is facing is Apple's iOS 14.5 app tracking option. The iOS app tracking option lets users opt out of app tracking their activities across different apps and websites. For example, if you download the TikTok apps on your iPhone, it will ask for your permission to track your activities across other companies' apps and websites. So TikTok can give you more personalized ads based on your interests. This app tracking option will also appear when you download the Facebook app on your iPhone. Here is the problem: most people will choose not to be tracked because most people will want more privacy. This is why Apple's app tracking option will continue to have a large impact on Facebook's advertising business going forward, because it will be much harder for Facebook to give personalized ads to users with fewer data. Management said this: "First, ads like others in our industry, we have faced headwinds as a result of Apple's iOS change. As we described last quarter, Apple created two challenges for advertisers. One is that the accuracy of our ads targeting decreased, which increased the cost of driving outcomes. The other is that measuring those outcomes became more difficult, and we believe the impact of iOS overall as a headwind on our business in 2022 is on the order of 10 billion. So it's a pretty significant headwind for our business, and we're seeing that impact in a number of verticals. E-commerce was an area where we saw a meaningful slowdown in growth in Q4, and similarly, we have seen other areas like gaming be challenged. And if you look at it, we believe those restrictions from Apple are designed in a way that carves out browsers from the tracking prompts Apple requires for apps. And so what that means is that search ads could have access to far more third-party data for measurement and optimization purposes than app-based ad platforms like ours. So when it comes to using data, you can think of it that it's not really apples to apple for us. And as a result, we believe Google's search ads business could have benefited relative to services like ours that face a different set of restrictions from Apple. And given that Apple continues to take billions of dollars a year from Google search ads, the incentive clearly exists for this policy discrepancy to continue. Apple's app tracking option benefits Google's advertising business a lot at the expense of Facebook, because Google ads are based on what you search on Google and YouTube. For example, if you always search stock analysis videos on YouTube or Google search, Google will give you more ads that are related to stock investing. In comparison, Facebook needs to track your activities across different apps and websites in order to give you more personalized ads that are based on your interests. Because of Apple's app tracking option, I believe many advertisers are shifting their ad budgets from Facebook to Google and possibly to TikTok. This is why Google reported large earnings beats while Facebook reported large earnings miss in the most recent Q4 quarter. Personally, I believe this trend will continue for at least several quarters until Facebook finds better ways to target ads with fewer user data than before, and until Facebook finds better ways to measure ad performance for advertisers. Here's another problem for Facebook. The company is still losing a lot of money from its Metaverse business called Reality Labs. Reality Labs include the augmented reality, AR, and virtual reality VR headsets and app sales on the Oculus Store. If you look at this here, you can see Reality Labs' revenue has been growing at a much faster rate than Facebook's advertising business. However, Reality Labs is also losing billions every year. For example, in fiscal 2021, Reality Labs had 2.3 billion of revenue, but it had an operating loss of 10.2 billion. Here is the important part. Facebook still earns around 97% of its total revenue from ads. All Facebook's operating income is from Facebook's family of apps, which includes Facebook, Instagram, Messenger, and WhatsApp. This means Facebook will continue to use its ad revenue from Facebook and Instagram to fund Reality Labs until this business becomes profitable. All these headwinds combined have caused Facebook stock to drop as much as 26% right after it released its Q4 earnings. So here is the important question. Is Facebook stock a value trap, or is it still a great company for long-term investing? Personally, I believe Facebook is not a value trap because Facebook is still innovating and creating new products such as Instagram Reels, Meta Quest VR headset, and the upcoming AR glasses. I believe these new products and services will eventually lead to higher daily active users growth and higher ad revenues for Facebook. However, in the short term, I believe Facebook will still face many headwinds that I mentioned earlier. Facebook's business will likely still underperform over the next several quarters because Facebook's daily users growth and ad revenue growth have slowed down significantly in recent quarters. Mark Zuckerberg said there are 7 major investment priorities for Facebook. These investment priorities are Reels, community messaging, commerce, ads, privacy, AI, and the Metaverse. According to the latest earnings call, Mark Zuckerberg explained the importance of growing Reels to attract more younger users going forward. He said, the first one is Reels. It's clear short-form video will be an increasing part of how people consume content moving forward, and Reels is now our fastest growing content format by far. It's already the biggest contributor to engagement growth on Instagram, and it's growing very quickly on Facebook too, as we continue to improve tools for creators, ranking for people watching. And as we roll out the product everywhere across the world, we expect this will continue growing quickly. So looking ahead, we're investing in simplifying video across Instagram, building more great creative and monetization tools for creators, and helping more people discover and interact with relevant views. Based on my personal experience using Instagram Reels, I believe it will eventually catch up to TikTok in short-form videos and help Facebook attract more younger users, especially younger adults. Of course, it will take Facebook more time to monetize Instagram Reels. Facebook is focused on improving Instagram Reels first and getting more creators to create more engaging content first, before adding more ads on Reels. Facebook's second and the most important long-term growth catalyst is its Metaverse business called Reality Labs. In my opinion, I believe VR and AR headsets, especially AR glasses, will be the next computing platform after the iPhone. Right now, Facebook's advertising business is subject to Apple's ad tracking and advertising policies, and Google's Android ad tracking policies. For Facebook to grow its advertising business further, Facebook will need to own its hardware. Since Apple's iOS and Google's Android OS already dominate the smartphone market, Facebook is focused on developing the next computing platform, which is VR and AR headsets. The most important product will be Facebook's upcoming AR glasses, because I believe AR glasses will eventually become a mass consumer product similar to the iPhone. Mark Zuckerberg said this. Now the last investment priority here is the Metaverse. We're focused on the foundational hardware and software required to build an immersive, embodied internet that enables better digital social experiences than anything that exists today. We're working towards a release of a high-end virtual reality headset later this year, and we continue to make progress developing Project Necessary, which is our first fully augmented reality AR glasses. Zuckerberg also said this. There's been this long-term trend that I commented on a number of times, where over the time that I've been running this company, 18 years this week, basically we have gone from text being the primary way that people share and consume content online at the beginning of the early 2000s, to then we got cameras on our phones and photos became the primary thing. And now that mobile networks are starting to get really good, video is really becoming the primary thing, and it's a lot more natural and engaging. This is partially, by the way, why I think that an even more immersive format around virtual reality and augmented reality is going to be the kind of next step after video, and why we're so invested there. But definitely what we're seeing with short-form video is it's the next step from the kind of visual feeds that we have and the amount of engagement and content that people want to share and interact with. And whether it's taking it and sending it to a friend in messaging, or commenting online, or just having fun watching it themselves, it's in general we're seeing people spend a lot more time on this than what we have seen from apps so far. And that's also reflected in the success that other apps like TikTok have had. So there's a lot more to go here. Realistically, I do not expect Facebook will have the same high revenue growth rate as before, because Facebook's user base is much larger now and Facebook already has very high penetration in North America. However, if Facebook's Instagram Reels succeed in attracting younger users, and if Facebook's upcoming AR glasses become the next computing platform, then I believe Facebook's daily active users and ad revenue growth will eventually pick up again. Let's talk about Facebook stock valuation. I always use this intrinsic value calculator to calculate the stock's fair interest value, so I will know whether the stock is overvalued, fairly valued, or undervalued. If you want this intrinsic value calculator, you can download it in my Patreon blog in the video description. These are the key assumptions. First, I define Facebook's intrinsic value as its future cash flows discounted to the present day. The discount rate is 10%. This is slightly higher than the 7% cost of equity calculated by Thinkbox.com. You can always use a higher discount rate here if you want to be more conservative. Facebook's most recent 12 months of free cash flow is $38.44 billion. Based on the major headwinds I talked about earlier, I believe Facebook's free cash flow will grow at a much lower rate than before, at a compound annual growth rate CAGR between 5% and 15% over the next 5 years. To calculate the terminal value at the end of year 5, we're using both the perpetual growth model and the exit multiple model here. Then we take the average of both models to calculate the terminal value. Let's go over these 3 case scenarios: the worst case, the normal case, and the best case scenarios. Under the worst case scenario, we're using a compound annual growth rate CAGR of 5%. If we forecast Facebook's free cash flow to the next 5 years and discount the free cash flow to the present day, Facebook's intrinsic value should be around $640 billion for the entire company, or $235 per share. I'm giving this scenario a 25% probability here. Under the normal case scenario, we're using a compound annual growth rate CAGR of 10%. If we forecast Facebook's free cash flow to the next 5 years and discount the free cash flow to the present day, Facebook's intrinsic value should be around $788 billion for the entire company, or $290 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're using a compound annual growth rate CAGR of 15%. If we forecast Facebook's free cash flow to the next 5 years and discount the free cash flow to the present day, Facebook's intrinsic value should be around $964 billion for the entire company, or $354 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, Facebook's fair intrinsic value should be around $292 per share. This means Facebook or Meta stock is slightly undervalued at the time of making this video. In comparison, Morningstar gave a much higher fair valuation for Facebook at $400 per share. So did I buy more Facebook stock? Yes, I bought more Facebook shares right after the company missed its earnings and right after the stock dropped as much as 26%. I have been a long-term shareholder in Facebook for several years already. My plan is to continue investing in Facebook for at least 10 years, as long as the company is continually innovating and creating many great products such as Instagram Reels, Quest VR headsets, and the upcoming AR glasses. In the short term, over the next several quarters, I believe Facebook's business will likely underperform because the company is facing a lot of competition from TikTok. Facebook's daily active users and revenue growth have slowed down a lot in recent quarters, and the iOS app tracking option is having a large impact on Facebook's advertising business. However, in the long term, I believe Facebook's daily users growth and advertising business will eventually recover because Facebook is now focused on growing Instagram Reels to attract younger users. Facebook is also focused on creating the next computing platform, VR and AR glasses that will become the foundation of the Metaverse. Now, all these analyses and estimates are only my opinions based on my research. They are not financial advice. You will need to do your own research and do your extra due diligence first before investing in anything. It is important to always invest in what you know and not speculate. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a premium member. Our goal is to help all our members grow their stock portfolios to over 7 figures over time. With your support, we'll be able to stay independent, hire other outstanding analysts to cover different stocks, and create many excellent stock analysis and investing videos every week that will help you become a great investor. The link is in the video description. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.